Hi, this is JC Parets with AllStarCharts.com, and today we're talking about shares of Amazon. In a few minutes, Amazon is going to report their earnings. It's just after 3 p.m. East Coast time here the day of their earnings release, which comes out after the close. And, for several reasons, we really want to point out why all of our upside targets have been hit, particularly from a tactical perspective, and why we want nothing to do with Amazon, long or short, and why it's no longer a problem. So first of all, we're looking at a very clean consolidation last year. Look at this correction from the all-time highs in early 2014, a beautiful downtrend line and a breakout that we got at the beginning of this year. So when you have very, very well-defined support levels right around this 285 level, a very clean downtrend line, and now a breakout, obviously that's a very good thing. What I love that occurred in April is that we got a gap higher above those all-time highs. I mean, quite frankly, nothing could be more bullish. We absolutely love that breakout. It puts us in a situation where we only want to be long shares of Amazon as long as we're above those former highs. And sure enough, we never even got close to down there. So from a risk-reward standpoint, it was definitely a long this entire time. And then the 161.8% Fibonacci extension of this entire correction was 485, and that target was hit over the last week. Now, looking a little bit more near term, here's the consolidation we got after the gap higher in April. Very well defined with two converging trend lines. Some might call this a symmetrical triangle. Call it whatever you want. At the end of the day, it's a very healthy consolidation within the context of an uptrend. So when we get a breakout out of this, we want to take the measured move. The size of this base is about 38 points. So on a breakout, we take the breakout plus 38, and what do we get? We get 485 bucks. So for multiple reasons, not just from a longer term perspective, looking at a 161.8 extension of last year's correction, but also the measured move of the most recent consolidation that we had over the last couple of months. So we hit our target, all bets are off. We don't want to be long, we don't want to be short. Quite frankly, we don't care what Amazon does. It could double from here, it could go to zero. It's no longer our problem.